Traders, welcome to our new video. It's going to be Elliott Wave analyzes the 2025 outlook. So, as you know, at the end of each year, I always went through a lot of charts and shared them with you. So this time I will do the same, and you will find this analysis useful. Make sure to check our services. You can get a 30% discount for the next 12-month period. So that's the special offer that will end on January 10th of 2025. By the way, we also partnered with Bybit. So if you will open an account with Bybit and deposit $100, you will get additional rewards. Plus, you will get a free 1 month free access at wavetraders.com. This offer will also end on January 10th. Now, let's go to the charts. So for me, what is very important is to look not only at one instrument at the time, but also to compare different instruments with each other. So meaning I'm paying a lot of attention to ratios because this may help us to define which market could perform the other one or which market could underperform. So here I'm looking firstly at dollar index versus the US Treasuries. So what we are seeing here, well, I still think that this ratio shows the potential consolidation that is not over yet. We have seen some very nice serious turn to the downside here back in 2023, and since then we are basically moving sideways. But what I think may happen is that we are still going to see more weakness here in this ratio, which means that the US Treasuries could potentially reach the supports in 2025. And I think whenever this will be the case, the dollar index obviously will see a very strong move to the upside. So regarding the US dollar for next year, I still think that the rates will play out very important role. Now, if we look here at the US Treasuries wave count, I can certainly see that market is coming here into the late stages of these 5 waves of decline. Well, there's still a chance that obviously we will take these lows out from 2023 before we potentially stabilize and complete this wave 5. And that's this, and that may happen at the same time when dollar index could potentially find the top around 110 111 area. It's not necessary that we will see dollar index moving here above 2022 highs. I just think that maybe we can retest these lows here on the US Treasuries, and then we finally bottom. US yields will turn to the downside when dollar index obviously would also hit a resistance. Keep an eye also on the emerging markets. Now, always when we have seen a very nice push to the upside on emerging markets, well, that was the time when the dollar index found an important top. And by the way, on the emerging markets, what we are seeing is still a very nice consolidation. And I think that more upside can be seen after a completed ABCDE triangle. So we could be in final stages of this phase. So what this means, it means that there can be a lot of US dollars potentially or investment potentially flowing into the emerging markets like China, Brazil, India, and this could possibly make these emerging markets cause a very nice push to the upside, especially if the US dollar would really come under pressure here. And I certainly would not be surprised that this was an important top for the dollar index and that we will see this dollar trend that was impacted by Trump victory in the US presidential election. I would not be surprised that once the Trump takes office, that actually we will see a reversal on the dollar, which will have very important impact on the other markets. Now, I think that the next chart is also very important. It shows that when Republicans were in the White House, well, that's actually when the US dollar has been moving to the downside. So I'm wondering if maybe we could see something similar right now, especially if we consider that during Biden administration, the dollar has been recovering. So maybe we are now going to see again new cycle here, and obviously I think that this that Trump wants US dollar, it would be much helpful also for their economy, especially for stock prices in general. As you know, Trump has been using or comparing the S&P 500 as a very good economic situation for the US. That's basically not really the case, but at least looks like that's something that matters to him. Now, when it comes to dollar index itself, obviously I also look at technicals, and I still think that obviously we could retest the lower side of this channel. We will see what may happen around 95, 97, which in my opinion still can come, especially if the dollar would really find the resistance around 110, 111 in 2025. While this dollar index obviously could see a turn to the downside, maybe that will be also the time when the inflation could slightly start moving back towards their target, which for now is still far away. That's why also the US yields are higher. And I think if this whole cycle will change, it may also have an impact on inflation as well. Now, if we look at the dollar index from an Elliott Wave perspective, as you know, we have these 5 waves down from 2023 and followed by this recovery. Now that's a very nice, very classic Elliott Wave pattern. So it's like a glide map for the 2025. And if I'm not mistaken, then obviously we are now in final stages of this wave C, which, as I said, could maybe stop around 110, maybe even 111 area. But certainly, I do not expect that price would revisit these highs. If suddenly happens, of course, then we will have to adjust the fuse here. But again, I'm comparing the current situation with the one that we have seen in 2016 for 2017, when we also had a very nice Trump rally here, and then the whole cycle has changed and moved to the downside. So maybe now it will be something similar at the start of next year. And as I said, we have a very classic Elliott Wave pattern here. So if someone is not familiar with the Elliott waves, well, that's actually the pattern that we are tracking. It's a 5-wave drop followed by a temporary corrective recovery. So we are basically now tracking wave C here, which can slowly be moving into the resistance. So we can already see how everyone is becoming bullish on the US dollar, how on the opposite side, on the flip side, if you want, is bearish on the euro. But I just think that in this kind of a sentiment, we have to realize that maybe this is about to change and the dollar will not continue straight to the upside. And obviously on the opposite side of that, as I said, I'm also looking at the euro dollar, and here very similar situation, very nice 5 waves up followed by a ABC drop. Of course, still room for 61.8, maybe 78.6% retracement before we may find on the bottom here, maybe even around parity. But it's not only about the Elliott Wave count here, it's also about the positioning. You can see that on the euro dollar here, the large speculators are heavily short, but they were also heavily short here in September of 2022 and also here in 2020. And you can see that always when we were at these extremes, well, the euro does the opposite and it moved to the upside. So I think that maybe something similar could happen again at the start of 2025, when we could start seeing maybe that these flows will change, and this could help us to stabilize the euro dollar downside here. Maybe even the ECB will slow down their dovish views. Maybe they will start following the Fed if Fed is really done with the potential cuts, or maybe they will be on hold. Maybe ECB will do the same, and of course this could have some positive impact on the euro. Now, regarding the US dollar, of course, we are also looking and comparing it with the S&P 500. So that's actually a ratio is dollar index versus the S&P 500. And we've been tracking this one over the last few years and also presented in our video last year as well. And we said that we are seeing prices here or ratio in consolidation, and obviously we were expecting that stocks will perform here quite well for 2024. And so far you can see a very nice and strong push to the downside. We could be in a 5th wave, but I still think that there can be a room for more downside because we do not see a completed pattern here. Even this wave 5 suggests more weakness because it should be structured and subdivided by 5 waves. So the idea is the dollar maybe will hit a resistance around 110. As I said, if we'll turn to the downside, this could cause another strong push to the upside on stocks and maybe, of course, some other assets as well. But maybe this will be the final push before we see some very important and big corrections coming out. But for now, I do not see that we are close to the top just yet. I think that the stocks, if they will see some retracement, I think this will be only temporary. Now, what is very important also and very useful to look for is at gold copper ratio, is known as an economic health indicator. Okay, and what usually has been the case is that always when gold copper ratio has seen a very sharp reversal to the downside, that was the perfect example for stocks that continued to the upside. They made a very strong break higher. It means that there were more demand for copper and there was no need to look for potential hedges or safe havens like in metals. Okay, because if economy is doing very good, then of course there could be investors that will seek and look for potential opportunities elsewhere rather than only on gold. Okay, so what I see here is an ongoing ABCDE triangle, and we can see that gold copper ratio is moving very nicely to the upside. But I would not be surprised if this cycle, if this current bull run here is coming to an end and we will see some retracement or fall back into this wave E. Maybe just temporary, but if this wave E would really show up, then I think that stock market will continue, will move even higher after retracement, because this has been the case always when the gold copper ratio turned lower. Also, it's important to keep an eye on sentiment. Okay, and this sentiment on stocks can be readable through put call ratios. As you know, if there will be a lot of puts, it means that investors are worried about potential fall in prices. If there will be a lot of calls, it means that there will be worried about or convinced, not worried, that market will continue even higher. But if any of it moves into extremes, well, that's when we should be aware of potential reversals in trends. Okay, so here what I'm actually looking at, well, below we have the put call ratio, but it's actually I inverted the scale because it's much easier to visualize and compare it with the S&P 500. So whenever we see this ratio here, based because it's inverted scale here at the top, it means that there are market sentiment moving into extremes. There are a lot of calls that are being bought, and if these calls are moving to some very extreme levels, well, maybe it's time to consider that we are approaching the potential top. And for even better visualization here, I put this inverted moving average of put call ratio, and you can see that we are here at the extremes. So I think it's a bit late to look for potential opportunities here on this market, but I think that this is very useful, because if suddenly we will see a very strong drop or pullback on stocks, and at the same time if we will have puts that will move into the extremes, or this moving average then maybe will move to the lower side of this range, well, that will be the time where we could be looking for potential new opportunity in stocks. Because even if I expect dollar maybe to move to the downside, well, at these levels, at these valuations here on the S&P 500, I just don't think it's very I don't think and I don't see any kind of a good entries. But if we will see some retracement here on a, let's say, for that will correction that will last maybe for a few weeks, and maybe we will also see then that puts will move into extremes, well, that's when I think it will be much easier to define the potential new opportunities on the stock market. At the same time, it's also important to keep an eye on VIX. We have seen some spikes recently, and this whenever you see very strong spikes like we have seen one this summer, I think that this could represent some very nice potential opportunity on stocks, because when everyone goes out of the market, that's when actually you should be looking for potential supports on the stock market, because normally the market will do the opposite. No matter how much someone is trying to sell stocks and get out of them, well, there are always new buyers that will show up the next year, especially institutions. So markets on the longer term, especially stocks, will always move to the upside, because there is always a new buyer, systematic, each day on the stock prices. So if stock prices goes even lower, there can be even more of these buyers that will sooner or later try to support the prices and turn market back to the upside. And I think whenever we'll have a new potential spike here on fear or VIX, readable also through VIX, obviously, then we will have quite interesting potential support levels on the S&P 500. But for now, as I said, we are quite high. We are not there yet. And here is the updated wave count here on the S&P 500 weekly chart, where I see potential wedge here that is trying to form a top now for wave 5 of an extended wave 3. So that's why I'm saying that maybe based on where we are with the calls at extremes, you have to be very careful here. But I still think that there can be new opportunities, especially if there will be some puts that will move into extremes in 2025. If we suddenly see these pullbacks, then I think there can be opportunities after this wave 4 retracing. So looking for any kind of trades up here, I don't really see them unless you look for some potential hedges. If you are long with your stock portfolio, then maybe some hedges would make sense. But overall, I just think that much better opportunities on the stock market will show up when we finally will get this retracement in wave 4. Now, another market which I think, or currency I should say, that we should pay very close attention to, obviously, is Chinese yuan. You know that the global markets are very dependent on China as well. And it's not only about that, it's also about correlation between Chinese yuan and gold. And here on dollar versus Chinese yuan, what I'm seeing is that we are most likely moving into the final stages of this wave C, of this recovery. So I'm basically thinking that we will see a break above 2022 highs, retest these levels before we potentially turn to the downside. So now when dollar Chinese yuan is on the rise, okay, I think that that's one of the reasons why gold is also in a correction. So as in the last few weeks, when dollar Chinese yuan started to move to the upside, when dollar is getting stronger, that's when actually gold stopped here close to 2,800, and the silver also pulled back. So I think that actually that metals will see much more upside, but much better and easier opportunities can be discovered when dollar Chinese yuan will finally find the top. Okay, so when this 5-wave move to the upside in wave C is completed and we finally see a reversal to the downside, that's when new opportunities can show up on metals. Because if you look here on gold, well, we certainly have seen a very strong push to the upside, but we have seen some euphoria here a few months back when everyone was trying to call 3,000, 5,000 on gold and silver 40, 50, which obviously is still possible on the longer run. But let's say for the next few months, I just think that we have to be aware of these corrections, because markets will never go just straight to the upside with one leg. There will be always pullback that will try to get rid of weak hands and cause the new liquidations before market finally stabilizes. So what I'm looking at here is some very nice push higher that has occurred in 2024, and you can see that now we are trying to stabilize. So I'm wondering if maybe this wave 4 is now unfolding, and as I said, because dollar Chinese yuan is trading to the upside, I would not be surprised if this wave 4 is really in the play here. But I think that very nice and very interesting support on the dip could be around 2,400. So watch these levels, or maybe 2,300. But if suddenly, let's say, something dramatic happens and we see metal liquidating all over the place, and then we suddenly go back to 2000 level, well, that will be the very strong indication that multi-year top has been put in place here. So overall, I just think that metals or gold is going to stay sideways here for the next few months. And also, not only gold, if we look at silver, well, I also think that this very big range is in play here. Everyone, as I said earlier, was very bullish here when we started breaking higher above 32 this year, a few months back. But then what happens? Well, the market topped out and now it's coming quite aggressively lowers here. So I think that we are basically trapped in a very big range that will not be broken just yet. What I'm looking at is that potentially very big triangle. So that was wave A, and you have a 3 waves up for a wave B. More importantly, notice that that was a triangle in the middle of this 3-wave recovery, and moves out of a triangle are final. So that's why I discovered this 35, 36 as a very potential strong resistance area, and I have to respect what the market is doing so far. And we have seen a reversal, so I think that we could stay in consolidation here for some time before starting break again to the upside. And by the way, as I said earlier, I still think that there will be opportunities, obviously in metals as well. But firstly, these consolidations that I'm tracking are not done yet. And this is also visible through gold silver ratio. Okay, always when gold silver ratio has been moving to the upside, what happened is that silver basically was the worst performer. It pulled back quite significantly, while gold was basically moving sideways. It didn't produce much of the upside here. So now when we are seeing here this gold silver ratio starting again turning higher, I think that there can be more upside coming, especially because this ABC drop is finished. So I think that 95,800 area could be reached in this gold silver ratio chart. And until then, I just think that we will not see any kind of a good potential opportunities. Of course, I can be wrong, but I just think that much better opportunities can show up on gold or silver when this ratio is finally done and will complete this rise, especially this lag from 2024 lows. So when this one will start turning to the downside, I think that both gold and silver could see some very push higher. But for now, I just think that there is more price and more time left to complete these corrections on both of them. Now, let's take a look on crude oil. As you know, crude oil has been moving sideways basically for the last few months. It didn't move much, but this tells me that we are in a consolidation corrective phase and that most likely we will see more weakness. And this could have a very positive impact on the US economy. As you know, Trump has announced and said that they will keep drilling. They want more oil prices. They want lower. They want more crude oil to be produced. They want, obviously, because of that, they want lower oil prices, and this will have a positive impact on the economy. And also, this can have a positive impact on the US inflation. And basically, you can see the correlation here between US inflation and crude oil is very tight. And recently, basically, we haven't seen much lower prices, and one of the reasons could be because crude oil has been basically moving sideways. But if we will start breaking lower here on crude oil into this wave C, I think that this will have positive impact also, will help to bring down the inflation. And I would not be surprised if we see crude oil next year trading around 60, maybe even $50 per barrel. And keep an eye on Trump remarks and their policy. Certainly, they will try to do everything to keep the energy prices a bit lower. Now, here's also one chart that I want to show is dollar Mexican peso. The reason why I bring this on is because you know how Mexican peso is basically moving based on Trump's remarks and policy. And I think that it's very important to understand that maybe it's not always easy to deliver what someone promises. Okay, and if I consider that that dollar has seen a very strong reversal here in 2016, 2017 when Trump took office. Now maybe we could see something similar. And the reason why I think that Mexican peso could actually see some very deep pullback here next year is also because Mexican peso in general has been doing quite well, has been one of the strongest across the board when dollar has been in downtrend. Okay, and I would not be surprised if maybe these correlations will return and that Mexican peso maybe could do quite well. And maybe there will be some limited weakness here for this pullback, but we are already seeing some interesting patterns on a smaller time frame unfolding right now, which may suggest the dollar Mexican peso could move lower. In fact, despite Trump victory, what has recently happened is the dollar index is trading above 108. It's trading close to the highs, but dollar Mexican peso is actually holding this resistance quite well around 21 and is trying to turn to the downside. So if dollar index sooner or later would really turn aggressively to the downside and form a top at the start of next year, I think that Mexican peso could really do well. Now, finally, let's take a look on the last market, which will be the Bitcoin. Well, where we are in a Bitcoin in cycles on cryptocurrencies is very important. Keep in mind that Bitcoin is not on the rise for only for the last month or so, okay, or 2 months. Basically, has been moving to the upside since 2022 swing low. So we are more than 2 years now in this recovery, and keep in mind that there looks like that we are slowly coming into this phase of greed. Okay, and I think that it's very important to realize that there is a risk of a very big new pullbacks next year. Now we have been looking and projecting this bull run for some time now, and we said that each bull run lasts around 35 months, or if you want, 3 years. And basically, this can take us to the potential end of the cycle in November. November, I think it's November, October of 2025. Yes, it's October of 2025. So basically, based on time, it's still some time left to see more upside. But just keep in mind that now the easiest potential opportunities on cryptocurrencies are already behind, because keep in mind that Bitcoin has already reached a new high. So discovering new opportunities here, it's a bit difficult. That's why you have to be very careful and be aware of potential limited upside next year, because I think that we are at the higher or upper range of this cycle model, and then sooner or later we will see again new big retracement. But of course, still I'm expecting weaker US dollar, and maybe this will cause some final push to the upside. Still can be very strong and extended and volatile move on cryptocurrencies. We cannot rule out this, but I'm just saying that sooner or later we are moving into end of these cycles, and obviously we will track the Elliott Wave patterns very closely with our members and trying to look for potential top if we will have the proper price action. But for now, we are not there yet. Okay, and I still think that this 5 wave movement that we are tracking here on a weekly chart still has room for more upside, especially after this maybe pause now for the next few weeks. Maybe we could see some kind of a consolidation, but I definitely do not want to see price going back below 80,000, because if that happens, then clearly I will have to say that wave 5 is done and that we are in a higher degree consolidation, and that could be the first indication that top is forming. But for now, what I see here is still incomplete wave 5, and maybe even some very strong blow off moves will show up here before we potentially top out, because I would not be surprised if market moves first a very strong push to the upside to to bring in even more investors that are very late into these stages before market finally and fully liquidates them and completely reverse the recent trend. Traders, thank you very much for your attention. I hope that you enjoyed this video. Please give me some feedback below this video. Let me know if you have any questions and what you think about it. And by the way, don't forget, we have the 30% discount code still available till January 10, 2025. The code is EW2025. So make sure to check this out. Traders, I wish you happy holidays and all the best in 2025.